I found a great video of Warren Buffett talking about whether or not you should wait until a financial crisis to invest in the stock market.
One quick question. How about structuring? You said if you had three great companies, wonderful businesses, they could last you a lifetime. And one thing that struck me in the way that I followed your investing is that you wait until great businesses get pounded down, and then you bet big on them, like American Express and Disney at one time. And my question is, I have capital to invest, but I haven't yet invested it. I have three great companies which I've identified: Coca-Cola, Gillette, and McDonald's. And my question is, if I have a lifetime ahead of me, which I want to keep it invested for more than 20 or 30 years, is it better to wait a year or two to see if one of those companies stumble, or to get in now and just stay with it over a long horizon?
Yeah. Well, I won't comment on the three companies that you've named, but in general terms, unless you find the prices of a great company really offensive, if you feel you've identified it, and by definition, a great company is one that's going to remain great for 30 years. If it's going to be a great company for 3 years, it ain't a great company. I mean, so you really want to go along with the idea of something that if you were going to take a trip for 20 years, you wouldn't feel bad leaving the money in with no orders with your broker and no power of attorney or anything, and you just go on the trip and you come back and it's going to be a terribly strong company. I think it's better just to own them. I mean, we could attempt to buy and sell some of the things that we own that we think are fine businesses, but they're too hard to find. I mean, we found See's Candy in 1972, where we find here and there we get the opportunity to do something, but they're too hard to find. So to sit there and hope that you buy them in the throes of some panic, that you sort of take the attitude of a mortician, waiting for a flu epidemic or something. I mean, I'm not sure that I'm not sure will be a great technique. I mean, it may be great if you inherit it. Paul Getty inherited the money at the bottom in 32. I mean, he didn't inherit it exactly. He talked his mother out of it, but yeah. It's true, actually.
Close enough.
Yeah, close enough, right? But he benefited enormously by having access to a lot of cash in the early 30s that he didn't have access to in the late 20s, and so you get some accidents like that. But that's a lot to count on, and if you start with the Dow at X and you think it's too high, when it goes to 90% of X, do you buy? Well, if it does and it goes to 50% of X, it gets you never get the benefit of those extremes anyway, unless you just come into some accidental sum of money at some time. So I think the main thing to do is find wonderful businesses. Is Phil Carre here? We got the world. Yeah, there's the hero of investing. Phil, would you stand up? Phil is 99. He wrote a book on investing in 1924. Phil has done awfully well by finding businesses he likes and sticking with them and not worrying too much about what they do day to day. I think there's going to be an article in the Wall Street Journal about Phil on May 28th, and I advise you all to read it. You'll probably learn a lot more with him by coming to this meeting. But it's that approach of buying businesses. I mean, let's just say there was no stock market, and the owner of the best business in whatever your hometown is came to you and said, "Look, my brother just died, and he owned 20% of the business, and I want somebody to go in with me to buy that 20%. And the price looks a little high, maybe, but this is what I think I can get for it. Do you want to buy in?" I think if you like the business and you like the person who's coming to you, and the price sounds reasonable, and you really know the business, I think probably the thing to do is to take it and don't worry about how it's quoted. It won't be quoted tomorrow or next week or next month. I think people's investment would be more intelligent if stocks were quoted about once a year, but it isn't going to happen that way. So, and if you happen to come into some some added money when, at some time when something dramatic has happened. I mean, we did well back in 1964 because American Express ran into a crook. You know, we did well in 1976 because Geico's managers and auditors didn't know what the loss reserve should have been the previous couple of years.
So now, if you listen very closely to the video, that he got very lucky with Geico and See's Candy and a lot of other businesses. The thing is, you have those great luck times. You have those great times when you have the best luck. Let's just say you invest in Apple in like 2005, or you invest in a company that is up and coming and you don't even realize it, like Nvidia, before the AI revolution. That's not always going to happen. And Warren Buffett explains in the video that, of course, yes, you should definitely try to, have that spare cash and try to invest in the best companies that, present themselves to you. Really, just invest into the best companies that you possibly can. But he does say at the very end of the video that you really shouldn't wait to invest your money, and you shouldn't wait to invest your money in, until the next financial crisis at the very end. So if a great opportunity presents itself, like when Berkshire invested in Geico, in, let's just say Apple and Chevron and McDonald's, all of these companies that they did in fact invest in, the opportunities presented themselves to Warren Buffett and he capitalized on investing in Coca-Cola. And Warren Buffett has said in the past that he invested pretty much the first like 25 cents or $10 that he had in stock. So he really didn't even wait whatsoever to invest in any sort of stocks themselves. So Warren Buffett is not someone who likes to wait for anything, really. If the opportunity presents itself to him, he grabs it and he goes full force into the investment, and that's the reason why he is a billionaire today.
Big opportunities in life have to be seized. We don't do very many things, but when we get the chance to do something that's right and big, we've got to do it. And even to do it in a small scale is just as big a mistake almost as not doing it at all. I mean, you've really got to grab them when they come. And because you're not going to get 500 great opportunities.
So remember, if you like this video, remember to leave a like, comment, subscribe, and hit the notification bell for more. And I really do want to know whether or not you personally would wait until a financial crisis to invest your personal wealth. Thank you so much for watching, everyone, and I will see you in the next video.